All right, let's talk about this markets here. We've had some folks talking about maybe rotating into more cyclical names, perhaps, sensing perhaps a reopening trade. That's certainly worked well at times since this pandemic began.
Reopening.
What's that? Yeah, exactly right.
Reopening.
Let's check in with Chance Finucane. He's Chief Investment Officer at Oxbow Advisors, based in, or I guess he's in Austin, Texas today, where, Matt, I think they have a small college or university there or something. I'm not sure. Maybe play a little football. So, Chance, thanks so much for joining us here. Talk to us about cyclical stocks and maybe how they feature in what you guys are doing today at Oxbow Advisors.
Sure. Thanks, Paul and Matt. So what we've noticed is if you're looking to add defensives or growth stocks into your portfolio this year, the time to do that was really in the first quarter. You saw some good valuations back in March especially, but some of those defensive stocks have really taken off in the last 6 months. For instance, American Tower and Costco have both appreciated by 50%.
Love American Tower.
Yeah, same here. So what we've noticed is even though the market's making record highs here in recent months, last month the average stock in the S&P 1500 was down 16% from its 52-week highs. And a lot of that was coming from cyclical and value sectors as interest rates came down and the Delta variant started to spread around the world. And we thought that would be a good time to start moving a little bit more of our portfolio towards cyclicals. And the three names that we came up with that we added to our clients' equity portfolios last month were Salesforce, Booking Holdings, and Berkshire Hathaway.
And so these aren't necessarily the kind of cyclicals I would think of. At least two of them are really techy, right?
Salesforce I would consider techy. Booking is one that I would think as more of a pure consumer discretionary. If you've been following the online travel agencies, Booking, Expedia, and Airbnb, along with the hotels, they've all been moving together through this pandemic as, like you talked about, the reopening happening. And I think as there were concerns about the Delta variant picking up in recent months, you saw those companies' shares sell off, and this is the one that we think is the highest quality right now and felt it was a good time to add to the portfolio.
So, Chance, what are when you think about Bookings Holdings, obviously a big play on consumer travel, how much do they depend upon business travel? Because that seems like something that, from what we're hearing, is going to be much slower to come back here.
I don't think it's as big of a concern for them as the global hotels that may feature more business travelers in their network. I think if you think about Booking, they actually are more exposed to Europe than their peers, and they have a lot of independent hotels in Europe that rely on Booking.com in order to get guests coming in on a daily basis. So I think that was part of the sell-off, was as the Delta variant spread, especially in Europe, there was some concern in the short term. But for us, when we take a 5-year outlook, we would expect revenue for Booking to return to its 2019 levels next year and then continue to ramp up to record highs going into 2023.
When you think about Salesforce, I mean, what drives that investment? Are you seeing a lot of corporate, CapEx increases?
I think for us, the way we think about the software as a service companies is just really wanting to play along with that secular growth trend. The underlying markets that Salesforce operates in are growing 10 to 20% a year, which is a nice starting point. And then you've got one of the few remaining large tech companies that is still run by its founder. If you think about the really large tech businesses, there's only about 3 left, along with Facebook and NVIDIA, that are really still run by a founder or co-founder. And so when you have someone with that kind of visionary mindset and a strong history of making smart acquisitions, we like partnering up with someone like that, especially in an industry that's still growing at a double-digit rate.
Chance, when I think about Berkshire, I'm just not sure it's anything more than kind of a GDP play. I'm just not sure what the catalyst is out there for this name, barring, a monstrous acquisition. How do you think about that in terms of catalysts?
Sure. I think we view it a little bit differently in terms of how it fits into our clients' portfolio. So for us, we always are looking to some counterbalances in the portfolio that are going to act more defensively if we get a bear market. But what we've noticed is we'd rather own something like Berkshire Hathaway. They can provide that sort of GDP growth plus share buybacks, which have picked up in the last 2 years, compared to owning something like Johnson & Johnson or Nestle that may be a stalwart in a defensive environment, but really are not going to participate in an economic reopening like we might have over the next couple of years.
Are you expecting real fiscal stimulus? Or are you expecting the infrastructure bill to pass? Does that play? Does it matter?
Not so much to us. I don't think we're ever trying to get ahead of any sort of political dynamics in the shorter term. If they happen to benefit the companies that we do own, that's terrific. But we're looking more to try and own anything for 5, even 10 years. And so usually we're looking for companies that are going to benefit from more structural growth trends and are less reliant on political outcomes working to their favor.
All right, Chance, thanks so much for joining us. Always great to get your insight. Chance Finucane there is a chief investment officer at Oxbow Advisors, talking about moving into 3 cyclical stocks that they have bought in August: Salesforce.com, Booking Holdings, and Berkshire Hathaway. Really interesting moves as we saw the rotation kind of peter out, and now we're hearing from others, including Marco Kolanovich, as I said, from J.P. Morgan, that it's time for the reopening trade. Get back into those cyclicals.